Imagine a world where your money buys less and less each day, where the prices of your morning coffee, weekly groceries, and monthly rent creep up, eroding the value of your hard-earned cash. Welcome to the reality of inflation, a silent thief that can chip away at your financial security, unless you know how to outsmart it. In this realm, few names resonate with the prowess and success that Warren Buffett does. Dubbed the Oracle of Omaha, Buffett isn't just a legendary investor. He's a beacon for millions seeking to preserve and grow their wealth in the face of inflation. But why listen to Warren Buffett? The answer lies not only in his remarkable track record of building wealth but also in his ability to do so under various economic conditions, including periods of high inflation. With a net worth that's a testament to his investment acumen, Buffett's strategies provide a masterclass in inflation-proof investing. In this video, we're diving deep into how you can make money during inflation, drawing on the wisdom of Warren Buffett. From understanding the basics of inflation and its impact on your investments to adopting strategies that have propelled Buffett to the pinnacle of the investment world, we're covering it all. You'll learn about the significance of investing in stocks, real estate, and bonds during inflationary times, the power of portfolio diversification, and why psychological resilience is your greatest ally in the investment game. But here's a shocking fact. Did you know that during the 1970s, a period marked by runaway inflation, Buffett's investment strategies not only shielded his portfolio but also helped it thrive, achieving returns that many thought impossible? It's this blend of wisdom, strategy, and resilience that we'll explore, offering you actionable insights to fortify your investments against the relentless tide of inflation. So, if you're wondering how to protect and grow your wealth when the purchasing power of money diminishes, you're in the right place. Join us as we unlock the secrets to making money during inflation, guided by the unparalleled strategies of Warren Buffett. Get ready to transform the way you view investing and inflation forever. Chapter 1. Understanding inflation. Inflation isn't just a buzzword economists throw around, it's a real phenomenon that affects how much your dollar can buy tomorrow compared to today. Think of it like this. If a gallon of milk costs $3 today but goes up to $3.30 next year, that's inflation in action. Your money's buying power is shrinking. Inflation rates, which tell us how fast prices are rising, are like the economy's heartbeat, and they're watched closely by everyone from the government to everyday shoppers. Historically, inflation has been a roller coaster with periods of rapid increases followed by stability. Remember the 1970s? That decade saw some of the highest inflation rates in recent history, drastically changing how investors approach the market. It's a powerful reminder that understanding inflation is crucial for anyone looking to preserve, let alone grow, their wealth. Warren Buffett, one of the most successful investors of all time, once said, "Inflation swindles the equity investor." It's a stark warning, but Buffett doesn't just see inflation as a hurdle. He views it as a landscape full of opportunities for those who know how to navigate it. He advises focusing on investments that can outpace inflation, ensuring your wealth grows in real terms, not just on paper. Chapter 2. Warren Buffett on inflation. Buffett's investment philosophy during inflation centers around selecting companies that can increase prices naturally with inflation, thereby maintaining or increasing their profit margins. It's not just about picking stocks, it's about understanding businesses and how they operate in different economic climates. Buffett's knack for choosing winners is partly due to his ability to discern which companies possess strong pricing power and durable competitive advantages, characteristics that are gold during inflationary periods. Analyzing his past moves, Buffett has often leaned towards companies with essential products or services, those that people need regardless of economic conditions. These businesses can raise prices without losing customers, a critical factor when inflation bites. For instance, Buffett's investment in Coca-Cola is a textbook example. Despite economic fluctuations, people continue to buy Coke, allowing the company to adjust prices without a significant drop in demand. Buffett's wisdom on inflation is peppered with insightful quotes, like when he observed, "The best businesses during inflation are the ones you can buy once and then sit back and watch." This encapsulates his strategy of investing in quality businesses with the ability to withstand economic challenges, including inflation. His approach emphasizes long-term value over short-term gains, urging investors to think beyond the immediate impacts of inflation and focus on sustainable growth. Understanding inflation and adopting Warren Buffett's investment strategies can empower you to make more informed decisions, ensuring your portfolio isn't just surviving but thriving, even when the cost of living climbs. Remember, it's not about reacting to inflation but anticipating it, a mindset that has made Buffett one of the most successful investors in history. Chapter 3. Investing in stocks during inflation. When inflation rears its head, not all hope is lost for the stock market enthusiast. Warren Buffett, a maestro in the art of investment, has often sung the praises of stocks as a viable hedge against inflation. But not just any stocks, Buffett looks for those with a robust competitive advantage, or as he likes to call it, a moat. These are companies so essential or unique that they can hike prices without customers batting an eyelid. Imagine owning a piece of a business that sells something everyone, everywhere, every day needs. These companies can adjust their prices in line with inflation, ensuring their profits keep pace with or even outstrip inflation rates. Buffett's affection for consumer staples and utilities highlights this strategy. These sectors often hold strong during inflationary periods because, let's face it, people still need to eat and keep the lights on, regardless of how much a dollar is worth. But Buffett's advice doesn't stop at picking the right sectors, he also emphasizes the importance of the company's management. A capable management team can navigate the choppy waters of inflation, steering the company toward profitability and growth. It's this combination of choosing companies with strong fundamentals and excellent leadership that has guided Buffett's success through various economic conditions. Chapter 4. The role of real estate in inflation. Diving into real estate during times of inflation might not be everyone's first instinct, but Warren Buffett understands the value hidden within bricks and mortar. Real estate often acts as a solid inflation hedge because property values and rents tend to increase with inflation. This asset class provides tangible protection against the eroding purchasing power of money, making it an attractive option for investors looking to diversify their portfolios. Buffett's ventures into real estate, through investments in entities like the real estate brokerage firm Home Services of America, showcase his belief in real estate's enduring value. The key here is leverage and location. Real estate investments can be leveraged, meaning you can control a large asset with a relatively small amount of money upfront. And if chosen wisely, properties in prime locations can yield significant returns through appreciation and rental income. However, Buffett cautions investors to remember that real estate, like all investments, requires due diligence and a clear understanding of the market. Investing in real estate during inflation demands a focus on properties that can generate consistent rental income, which in turn can keep pace with or exceed inflation rates. Moreover, the fixed-rate mortgage interest becomes relatively cheaper over time as inflation rises, making it an opportune moment to finance property investments. Buffett's approach to real estate, much like his approach to stocks, is marked by patience and precision. It's not about flipping properties for quick profits but about investing in valuable assets that promise steady growth over time. This strategy, rooted in thorough analysis and a keen understanding of market dynamics, underlines the importance of real estate in a well-rounded inflation-proof investment portfolio. Chapter 5. Bonds and inflation. In the dance of investment options, bonds are often seen as the more reserved participant, especially during the loud party that is inflation. Warren Buffett himself has voiced caution regarding bonds in an inflationary environment. Why? Because inflation can erode the purchasing power of the fixed interest payments that bonds provide. However, Buffett's nuanced view on bonds offers valuable lessons on navigating this asset class amidst rising prices. Buffett advises investors to consider short-term bonds or inflation-indexed bonds, such as Treasury inflation-protected securities, TIPS, during periods of high inflation. Short-term bonds are less sensitive to interest rate changes, which are common during inflationary periods, thereby offering a safer haven for capital. TIPS, on the other hand, adjust their principal value in line with inflation, ensuring that the investor's purchasing power is preserved. Despite his cautious stance, Buffett doesn't dismiss bonds outright. Instead, he highlights the importance of being selective, focusing on bonds that can mitigate inflation's impact. It's all about balance and understanding the economic landscape. For investors, this means considering how bonds fit into a broader, diversified investment strategy that also includes assets more directly tied to growth, like stocks and real estate. Chapter 6. Commodities as an inflation hedge. Buffett has often been seen as a skeptic when it comes to investing directly in commodities, and it's not hard to see why. Commodities, while potentially lucrative, do not produce anything. They don't have earnings or pay dividends. However, Buffett's investment in companies that are commodity-related underscores a strategic approach to leveraging the inflation hedging properties of commodities without direct exposure to their volatility. For instance, investing in businesses that produce or heavily rely on commodities can be a savvy move. These companies can often pass on the costs of inflation to consumers, thereby protecting their margins. A classic example is the oil industry. As oil prices rise, so do the profits of oil-producing companies. Buffett's foray into companies like Occidental Petroleum highlights this indirect approach to commodity investment. Moreover, commodities like gold have traditionally been seen as a safe haven during times of inflation. While Buffett has famously been critical of gold as a long-term investment, he acknowledges its role in a diversified portfolio, especially as a hedge against extreme market turmoil and inflation. The key takeaway? Commodities should not form the cornerstone of an investment strategy but rather complement a well-rounded portfolio, offering protection against inflation's erosive effects. Chapter 7. Buffett's Business Principles During Inflation. Inflation can turn the investment world upside down, but Warren Buffett's business principles remain steadfast, guiding investors through tumultuous times. At the core of his strategy is the belief in investing in businesses with strong pricing power. This concept is simple yet powerful. Companies that can raise prices without deterring customers can sail through inflationary periods relatively unscathed. It's not just about passing costs on to consumers, it's about offering value that customers are willing to pay for, even when prices go up. Buffett often highlights the importance of understanding a business's fundamentals before investing. This means looking beyond the numbers and evaluating the company's competitive position, its products or services, and its ability to generate cash flow. For instance, See's Candies, a part of Buffett's portfolio, demonstrates how a business with a loyal customer base and a unique product offering can maintain profit margins even as costs rise. Another Buffett principle is the focus on companies with durable competitive advantages, or moats, as mentioned earlier. These businesses are not just survivors, they're thrivers in inflationary environments. They possess qualities that protect them from competitors and market forces, such as brand strength, regulatory licenses, or a unique product or service that's difficult to replicate. Chapter 8. Portfolio Diversification and Inflation. Diversification is a cornerstone of sound investment strategy, especially in times of inflation. Warren Buffett, however, offers a nuanced view on diversification. He advocates for a concentrated portfolio of high-quality stocks over owning a bit of everything. The logic is clear. If you've done your homework and truly understand the businesses you're investing in, a concentrated portfolio allows you to maximize returns from your best ideas. However, when it comes to inflation, even Buffett acknowledges the wisdom in spreading risk across different asset classes that historically perform well under inflationary pressure, such as stocks, real estate, and certain types of commodities. The key is to maintain a balance between seeking protection against inflation and pursuing growth. Buffett's advice on portfolio construction during inflation includes a mix of equities with strong growth potential and investments in real assets with intrinsic value, such as real estate and land. This strategy not only aims to protect against the erosive effect of inflation on money but also seeks to capitalize on the growth opportunities that arise during such periods. Moreover, Buffett emphasizes the quality over quantity in portfolio selection. Each investment should be chosen based on its merits, potential to outperform during inflation, and alignment with the investor's long-term goals. This selective approach requires discipline and patience but can yield significant rewards as it focuses on value creation in the truest sense. Chapter 9. Psychological Aspects of Investing During Inflation. Investing during inflation tests not just your financial acumen but your mental strength. Warren Buffett, known for his Zen-like approach to investing, emphasizes the psychological resilience required to navigate these challenging times. He famously said, "The stock market is designed to transfer money from the active to the patient." This wisdom becomes even more pertinent during inflation, as fear and uncertainty can lead to rash decisions. Buffett advocates for a long-term perspective, urging investors to look beyond temporary inflationary spikes and focus on the fundamental value of their investments. He believes in the importance of staying the course, provided you've invested in businesses with solid fundamentals. The temptation to react to short-term market fluctuations is strong, but history has shown that patience pays off. Remember, investing is a marathon, not a sprint.